It's a brand new business day here in Nigeria after the long Christmas weekend holiday. Welcome to Business Morning to our viewers here in Nigeria and around the world. I am Bosin Mafaya in today for Harriet Agbeyi. What's in the news as we get started? President Muhammadu Buhari's fight against ghost workers is yielding not just cash clawback, that's estimated at about 145 billion naira so far in 2016, but the government says a syndicate of 11 people who are the arrowheads of this monumental fraud on the payroll of the federal government has been arrested and now handed over to the Economic and Financial Crimes Commission, or the EFCC. Meantime, the Senate Committee on Trade and Investment has summoned the management of the Nigeria Exports Processing Zone Authority, or NEBZA, in Calabar, Cross River State to account for 2016 budgetary appropriations and revenue performance. Meantime, pay as you go. 8 power distribution companies have reportedly rejected a total of 1,337 megawatts per hour of electricity supplies from the Transmission Company of Nigeria in order to avoid payments. Newspaper report says over the past few months, these 8 power companies refused to take electricity supplies from the distributor, the TCN, because they're trying to avoid payments. Of course, you all know about billions and billions of naira being owed to power companies. So if you're worrying about how electricity supply has been a little bit epileptic over the months, the power companies, the 8 of them, reportedly avoiding taking on what they're unable to pay for. Let's cross over to the markets now and see how we finished off on the transactions before the long Christmas holiday. For those of you who are just coming back to your desks today, let's remind you where we finished off on Friday. That's the Friday before Christmas. Everyone seems to be in a hurry, but now it looks like the Christmas is now behind us and everyone looking into the new year. So let's remind you, the secondary market via the FMDQ OTC Securities Exchange fixed income market, starting with the FGN papers at the secondary window. The market was quite active on the final trading day. On the basic, more important, the long end of the yield curve, 18th July 2034 paper, 79.30 as a price high, value of 2.2 billion. In 21 deals. 2024 paper was much higher in terms of naira value, 30.3 billion at 94.20. Then you find 10 deals for 1 billion naira in July 2019 paper, and another 2034 paper, 18th of March, 500 million in 5 deals. Look at the summary page. A total of 54 deals for 34.5 billion. That's quite aggressive. But there's a lot more aggressive trading at the Treasury bills market. And look at the discount highs for some of the Treasury bills traded. Most active January 2017, 200 deals. That's quite massive. 50 billion as investors look to claw in some of that by the time we step into the new year in the next couple of days. That's the Treasury bills maturing in about 3 weeks from now. And look at it, naira value, close to 200 billion, 192.74, 746 deals. That's quite aggressive. Final trading day, a lot of investors and traders trying to balance their books now as we head into the end of the new year. But look at the NESD market, which you call the unlisted securities market. The US side, that's the unlisted securities index, was 621.55 reading on Friday, largely flat. Lackluster, 420.62 billion naira in terms of the total capitalization of that new securities exchange, just about 2 years old. In terms of transactions, it was just 4 deals on Friday, 333,380 units of unlisted securities. That's about 1.89 million. Quite lackluster, but of course we'll always track that market. It's an emerging market for us here in Nigeria, so we'll keep that on our burner here on a daily basis on Business Morning. So let's step into the interbank market. Rates went high on Friday of illiquidity in the banking system. That's the Naira rate. So don't be surprised when you saw on Friday those images across the country that many Nigerians, or some Nigerians, at the banking halls couldn't get cash via the banking halls or the ATM. Now, this was responsible. Look at the overnight money. Between Thursday and Friday, overnight placements among banks went as high as 20.7%. So, because there's no cash on the street, customers couldn't get money, and a lot of folks went home disappointed. So if you look in your neighborhood, and I'm sure perhaps you noticed that, Saturday and Sunday, folks were all back at the ATMs across the country looking for money. And this is where you find the problem. So the interbank money was that. Look at 1 month money. If we bring that back very quickly, if you look at overnight at 20.7%, and you're looking at 1 month future interbank money market rate 18.74%, 3 months as high as 1995, and 6 months 23.37. That tells you the level of illiquidity in the market. The numbers are up. That means red. So that means stop. Look at the stock market. Now, this is what the summary looks like. It's been a very blistering year to start for 2016. This is the third year in a row that the Nigerian stock market will be in the red. In 2014, the stock market fell 16.1%. Last year, 2015, the market lost 17.4%. And as we speak, the market has lost 7.5% since year started. Well, thanks to the comeback that we saw in the month of December, trying to erase the previous losses at the local stock market. That was where we finished off on Friday. That's the weekly report, 26,486 on the composite index, what you call the all-share index, or you call it the general index, whatever terminology you decide to use. The market cap sitting around 9.1 trillion naira. Look at the volume for the week, 1.26 billion. 17.52 billion naira in terms of naira value. That bit of aggressive trading in the final days to Christmas, 14,861. That week was quite positive in terms of volume, but in terms of price gain on the index, that was red. So let's flesh up this a little bit, shall we? Let's bring. Let's look back at the markets and track some of the asset classes and the portfolios and their returns. Let's get started with the money markets and funds portfolio with ARM Securities, where one of the research analysts, Philip Anegbe, is joining us now via Skype from downtown Lagos. Philip, good morning to you and great to have you on the program. Hope you had a nice holiday. Did you?
Yeah, good morning. I had a nice holiday. Thank you very much.
You're sounding very upbeat. It's a nice day to have you here. Traditionally, the last 3 days of every year looks like, well, you folks are in shirt and just no tie. Everybody's dressed down. Yeah, he said. But we need to look back. Tell me, in 2016, Philip, what asset classes from the money market to mutual funds or pensions really got your attention?
For 2016, we did see fixed income investments actually do really well. And that's major support for most funds. You look at pension funds, for instance, pension space, you discover that pension assets, overall pension assets was really supported by strong growth in fixed income investments. I think fixed income investment was up by about 24%, close to 4.7 trillion for the period that's looking at from January to September 2016. This growth was even more than enough to offset weaknesses we saw in variable income investments in the period. So fixed income for me had a strong performance over the period. We saw weaknesses across equities. Particularly looking at the fixed income space, the federal government bonds and corporate bonds actually did very well. I think investments in fixed government bonds, talking about government bonds as a subset of the overall pension asset, I think it rose by about 26%. Corporate bonds as a subset of overall pension asset, I think it rose by about 99%. That's to tell you that there was a strong growth in those areas. And it's largely in line with upbeat yields. We know that yields are elevated across the space. That's on the back of CBN's tightening and as well as current increases in inflation, essentially.
Philip, did anyone make money from the money market funds or mutual funds in 2016, do you think, because, of course, the stock market was the whipping boy of the year, as it were. So do you think mutual funds was any attraction whatsoever in the year ending in the next 4 days?
I think the number of mutual funds were lower over the period. I'll take you back to pension assets, more like the composition of pension assets. You saw that most of the weaknesses we saw for that pension assets actually came from variable income securities. And of that lot, you saw that investments in local money market securities were actually down by about 13%. It gives you a sense that there was weaknesses across that space, essentially. So the main gains really actually came from the fixed income space, where we saw it actually take the pension assets to greener zones.
Phillips, but again, for those that made money from the fixed income space and on the money market, inflation throughout the year was quite a major head-scratching one as far as that's concerned, and currency as well. So if we try to net off, as it were, do you think it was really worth it?
For pension fund assets, it was worth it because you look at the overall asset, it's up by about 17% to about 6 trillion. That essentially tells you that it's still a rosy picture for overall pension assets. But then there are still some concerns that are actually coming out. These concerns relate more to administrative issues. For instance, the problem the federal government and state governments are having meeting up pension remittances through the TENCOM. They have not been remitting all pension remittance, and that's a major concern, especially as regards the issue of confidence in the space. Overall, pension penetration is still low at 8% relative to countries like Ghana that is doing about 10%. We have Chile and the likes of Mexico doing a strong double-digit penetration. So I think going into 2017, the major challenge is to see how we can deepen pension penetration across the country. I think the whole idea of encouraging micro pension scheme is actually a welcome one. Recently, it gained further support with TUC, more like giving support to effecting pensions transactions through mobile phones. I think that should support the whole campaign to actually gain grants on the micro pension fund. That should support overall pension penetration in Nigeria.
Okay, we'll wrap up the conversation. Philip, the equities market, the stock market, of course, the traditional mantra, as it were, is that buy low, sell high. The market's been low for 3 years in a row. So why are investors not buying it?
I think the overall macro picture for Nigeria is still very weak. We know that the government is still continuing to struggle with revenues. I've mentioned the challenge of meeting contributions to different ROC accounts. That's big, and it's actually impacting confidence. But beyond that, you have other concerns in the area of currency. You still have currency scarcity affecting most manufacturers. Input costs really elevated, and so earnings have not really done well across a lot of companies. So you find out that investors have actually priced these deficiencies into their valuations, and of course, it continues to underpin that relative averseness to Nigerian equity space. So for a number of people, the safety play still remains what they choose to opt for, especially given that yields are currently at very elevated levels.
Okay, Philip, we thank you very much for coming through to us. I'm sure in the days ahead we'll still we've wrapped up the year a little bit, but still a lot to talk about, and again the outlook into 2017. But thank you very much for bringing in the pension market space into this entire conversation, what the government needs to know to do at the federal and state level. Philip Anegbe, enjoy your day, and thank you to you and the rest of your colleagues at AIM Securities via Skype from downtown Lagos, Victoria Island to be precise. When we come back after the break, we'll stick with the markets. The oil and stocks, bellwethers, were in the red on Friday. Perhaps you ignore that in the news because you were busy shopping for Christmas and getting ready. Let's get some of these conversations on as we get into the second round of the program, part 2, as it were. We'll be back in 2 minutes.